Boom. What's up, y'all? Good morning. Good morning. Good morning. Welcome to another edition of the Brothers of Legacy. I'm your host, A.D. Walker, the pusher, the grower, the motivator. I appreciate you guys for being here. Apologize for the tardiness. Had some technical difficulties, but we are here. We are in the building. So make sure you are sharing. Sharing is caring. And again, thank you for being here and always supporting and being a part of all that the brothers are doing. I am not going to hold the time, but I did want to just say, what up? What's up, Jeff? Good morning. Good morning, brother. Again, make sure you're sharing. This is your opportunity to share. Because you always know sharing is caring. So we're gonna have a great conversation with my brother Jamal Brown. We're gonna be talking about becoming your own bank and protecting your legacy. Becoming your own bank and protecting your legacy. A lot of conversations you may have heard around the internet, but this will give you an opportunity to ask some questions, some real questions, dealing around insurance and the different types and just estate planning and things of that nature. So we're going to have a great conversation. Keep it fun, keep it entertaining. What's up, Lisa? Good morning. Good morning. What's up, Mama Corey? Appreciate that, Jeff. Appreciate that. All right. So make sure you share. We're going to drop this intro real quick and have all my brothers come through. And let's get busy. Boom. Oh, how did I forget? There we go. Bam. All right. Now we're all in the building. Good morning, gentlemen. Good morning.
Morning.
Yes, sir.
John Beckman here because of Jeff Carlin.
Yes. Appreciate you, Jeff.
Appreciate you, Jeff. Welcome, John.
What's going on, John? Jeff, you brought in one of your cohorts, huh? I appreciate that, brother.
All right. Appreciate you, man. So let's get into it. So we have to my left, right, my brother like no other, Kaneem, aka CL Smooth.
Yes.
Give you a moment. If you don't know who that is, I won't hold it against you.
I reminisce.
And got Pastor Brian A. McCrory Sr. at the bottom, as well as now we have a guest that has come through, Mr. Jamal Brown. All right. So Mr. Jamal Brown, I want him to dig into what he does and we can kind of get into the conversation.
All right. Hello, everyone. Thank you again, Mr. Walker, for allowing me to come on your platform. And this is something that I am extremely passionate about. I have been in the financial industry, insurance, financial planning, things of that nature. Really, for the most part, I started my journey in 2011. I did well, but then I stopped because the Lord called me to pastorship. And so I started pastoring. And as I started pastoring, I had a life event in which my hero, my Black Panther, my father, died unexpectedly.
Wow.
And it did something to me that I'm still trying to unpack. But out of great pain, oftentimes the principle God uses is he's birthing something.
Okay.
And so when we went through what we went through with my dad's passing and that ordeal, it birthed an energy in me in regard to building generational wealth.
Okay. Awesome.
Particularly in our African American community, which I come from, right? right? Particularly in that. And changing the mindset of our people to match, to be quite honest, to a degree, the mindset of many of our other brothers and sisters that are of other hues and ethnicities, has become part of my ministry.
Okay.
So a lot of people ask me, how are you doing pastoring and doing ministry? I look at it as all in the same.
All right.
The goal of any pastor is to set the people free. He's a shepherd.
Right.
Right? That's the goal. And so I use what I like to call the good book principles, because not everybody's a Christian, and I'm not going to force my belief on anybody.
Right.
But what I do agree is that we can follow certain principles. And
Yes.
if you follow certain principles, you'll win. Period. They apply to everyone.
Right.
And there are principles that govern finances. There are principles that are in Scripture that govern money.
Mm-hmm.
One of them you find in Genesis chapter 8, verse 22. As long as the earth is in existence, there will be seed time and harvest time.
Right.
That's a principle that governs money.
Right.
It governs finances.
Right.
All right. So
Mm-hmm.
what does that all mean in regard to being your own banker? Banks follow this principle. I'm just going to be honest with you. Banks don't have money.
Right.
Banks have your money, my money.
Right.
And they use our money and they sow what we put in there as a seed and put it in a vehicle that makes the money multiply.
Right.
Interest.
All right. Oh,
right?
yeah. So as we digging in, so how would, did we jump right into that? How would you, and I'm sure you're getting there, but how would you become this bank? Yes, yourself.
One of the greatest kept secrets is a secret that's kept is in plain sight.
Right.
But they keep it from you. It's called life insurance. So please, everybody, write this down. I don't care who it is. The banks do it. The people who you see that are multimillionaires and billionaires, they follow pretty much one mathematical equation. So write this equation down if you get a chance, or put it in your phone. Here it is. You ready?
Right.
They're gonna put this money in. They're gonna call their money goes passive income plus dividends. I like to put / compound interest minus taxes equals wealth. Passive income plus dividend minus taxes equals wealth. Albert Einstein said the eighth wonder of the world is compound interest. It's what governs money. Money was built to grow.
Right.
Now the key is how do I make my money grow and at the same time and receive a passive income stream from it or dividend from it, right? And then not be taxed heavily. Now, I'm going to go here first and then I'm going to come back. I'm going to go forward and then come back to explain it.
Okay.
Please get this. And I'm going to be respectful because everybody's political beliefs are different. So I know we're on a platform, but you can learn something from people, whether you like them or you don't, if you put yourself in position to be willing to listen. During the presidential election, President Trump at the time, whether you like him or not, is irrelevant. But he told some truth. Folks got upset with him because they said he was a billionaire and he paid less in taxes than you and I did.
Right.
Y'all remember that?
Right.
And folks got mad and said, That ain't right. We got all in our feelings instead of trying to go get the bag. The real question, because then he says, don't get mad at me because I use the tax laws the way they're supposed to be used. He said, don't get mad because the Obamas do it. He said, don't get mad because our current president, he does it. Hillary and Bill do it. But y'all mad with me. The question we should have been asking is, if he can do it, how can I do it? That's called a key phrase called structure. Now, what does this have to do with life insurance? Being your own banker is literally about putting your money into a life insurance policy. Now, in order for me to state this, I do need to clarify some things real quick. There are three types of life insurance policies primarily. There's term, there's whole life, and there's universal life.
Okay. Okay.
So please get this. All right. There's three primary types of insurance, life insurance: term, whole life, and universal life. All three of them have a place. Be careful of folks who will tell you don't use one or the other, because literally what they're doing is pigeonholing you.
Okay.
Be careful. Be careful of folks who will tell you just buy term and invest the rest. Be careful because they're pigeonholing you. Listen, life doesn't operate that way. A principle of life, I'm going to give you a word: options. You should always want as many options as you possibly can.
Okay.
All right. So, term, here it is. Let me give you these three so you'll understand where we're going with this and why being your own banker is so effective. I just got to give that backdrop. Term is traditionally used in one of two ways. It's either for mortgage protection, right? You bought a home, you want to make sure as the breadwinner, if you pass away unexpectedly, your family can have the money to pay off your mortgage.
Right.
Or it's used for what we call lifestyle, income replacement. I call it the 9/11 rule. Everybody on here, you need to know whether or not you're in the range that you are for your family. What I mean by that, when I call it 9/11, I had a cousin, she died in 9/11. She was in the North Tower on the 100th floor. When the plane hit, she was incinerated. But her daughter became a millionaire overnight. What the government did was use this mathematical equation. So what they did was they looked at her age. Her age was 45. Let's say she was making $50,000 a year. Then what they did was, okay, she got an 8-year-old daughter. She's 45 years old. Her daughter's going to be dependent on her income replacement, right? So they went out 20 years because she scheduled. Most people retired at that time at age 65. So 50,000 times 65 gives you what? $1 million. That's how much she was worth, plus obviously cost of living, right? You got to put that up there, right? But let's just say base $1 million to make it easy.
Right.
So I would tell everybody on here, you need to look at yourself. How much life insurance do you have on you? Because if all you got is $100,000 of life insurance and you make $100,000, you only provided your family $100,000 of coverage of your income being replaced.
I got
you. To me, I don't think that's wise.
Okay.
My opinion. Okay. So that's term. Whole life.
That's the reason for term. Okay. I'm with you.
That's your primary reasons for term.
Okay.
I'll say that. Whole life. Whole life is exactly what it says. It's going to cover your whole life. Term goes away. Whole life is there. You can't outlive it. Now, let me be clear. Every whole life is not the same.
Okay.
That is really important. So please take this, write this down. The question you have to ask, particularly.
Hey, good morning,
Huh?
Oh, I'm just saying good morning to my peoples. Go ahead.
Okay. Particularly with whole life, or particularly with ULs as well, but particularly, you got to understand this. All whole life doesn't operate the same because of structure.
Right.
So the company that you're dealing with is key, particularly in regard to being your own banker.
Okay.
Or infinite banking, as you've heard it on YouTube a lot.
Right.
They're both the same. What it means is if you are with a stock company, please understand that. Always understand. Remember the mathematical equation I gave you. Passive income plus dividends minus taxes is going to give you wealth. If you're with a stock company, guess who is getting the dividends from your premiums? The stockholders.
Right.
If you're with a mutual company, then you as the policy holder is getting the dividend. This is important, y'all. The infinite banking, being your own banker concept only works if you're with a reputable mutual company.
Okay. So pause right there. Pause right there for a second. All right. So we're in the whole life. You're talking about the whole life space.
Right.
Right. Okay. And finding the right company that will pay you or allow you to access the dividends that you're earning from your insurance, basically.
Yes.
Whole life will.
The whole life.
Well,
yeah.
It's not just whole life.
I got you.
I want to make that correction. Now, the primary type of policy in regard to infinite banking, many use whole life.
Right.
But it's not the only. So I just like to put that out there. Whole life, because of whole life's consistency, it's almost kind of like that old song back in the day. I forget who sang it. What you see is what you get.
Right.
You can pretty much bank on it, right? So the company, though, strength, how long they've been around is critical. Okay? In regard to whole life. Now, it also, though, can be utilized through what they call, the UL has a, if you will, an older, younger brother to it called an IUL.
Okay, so universal life.
That universal life has a thing called an IUL. It's called an index universal life.
Okay, let's go.
If this is properly structured, that's key. It can really do wonders. So you can use, in my opinion, and based upon my experience, you can use either one. You can use a whole life or you can use an index universal life. It is the reason, but everybody, please get this, it's different. So you're somebody like me, here's the thing, how you want to gauge if it's somebody like me. If they're trying to convince you to do it just their way and they ain't asked you about you and your family, your needs, your wants, your makeup, please run from them because they're selling you.
Okay.
They're selling you. It's kind of like all of us up here. I don't know who's all up here. I only see 5 of us. I guess there's more, but all of us up here looks like, at least from what I can see, we're all black men. Right. From what I can see. There may be others, but all I can see right now is we're all black men. But just because we're black men don't mean we're all the same, correct?
Right.
So if you went to if you went to see my doctor and my doctor says, hey, I'm going to put you, if he sees brother Pastor McCrory and he says, Pastor McCrory, you and Pastor Brown, y'all like, you know, the Cowboys, y'all are both black men, and because y'all Cowboys and y'all both like black men, we gonna make sure that we put you on blood pressure medication. Mr. Pastor McCrory, would you walk out of that doctor's office?
I would.
Exactly.
I would.
Exactly.
Look, because I'm on blood pressure medication.
No, but I'm using it again as a scenario to understand. No. Someone needs to be talking to you about you.
All right, let me ask you this question.
Yes.
Let me ask you this question, Brother Brown.
Mhm.
So use me as an example, right? So I got
Okay.
whole life. I got whole life insurance.
Okay.
And I've been having whole life insurance probably about almost 15 years.
Okay.
And it's been the same. So they came around probably about, I guess maybe every 3 to 5 years I hear from somebody wanting to update me on my policy or whatnot.
Mhm.
And the last time that they talked to me over the last 10 plus years, I think that now I got like $1,800 some dollars that they told me I need to take out. And I was asking, I was asking the lady, like, what would I need to take this money out to do for?
Right.
And she was telling me that I needed to use it for whatever purposes, as far as I can use it for whatever, right? And I was like, well, how long did it take me to get this to build this $1,800+ And she's like, since you started. I was like, you said me it took me over 10 years to build $1,800. So, but the thing about it is, when you said being sold, I was sold because I had no idea about what a whole life policy was. I knew term, and I knew whole life, but I don't knew the basic principles. You know what I'm saying? So this was way back. I was early 30s. So I've been just having this policy, you know what I'm saying, paying this monthly premium for the last some odd years. So use me as an example. Do I stay with my policy? Can I transfer my policy? Should I get another policy? Can I cancel my policy? What would be the best case scenario? Because I know my policy is basic, just by the fact that it took me 10 plus years to get $1,800.
Right.
So use me as an example. You know what I'm saying?
Okay. No problem. So if I go in, or if anybody, I don't care who it is, to be quite honest, I need to understand about you, sir. CL Smooth. I want to understand. First thing I'm going to say is, sir, can I see your policy? I want to understand what company you're with. Now, just off of what you're telling me, I already understand. It sounds like you're with a stock company.
American Income Life. That's the company.
Stock company.
Okay.
So your money, your premiums have been making dividends. It's been making money, but the stockholders have been getting it, not you.
Gotcha. Okay.
Right.
I'm not
you get a percentage.
stating that. Hold on a minute. Let me put my glasses on. I'm not stating that that's wrong. It all depends on what it is you want to do. What's your end game? My job is to help you. Let me understand what your end results are, what you want to happen, because life is going to happen, right? What your plan is, and then what we got to do is devise a plan around that. See, if I'm here just selling you, I'm just trying to get you to get a policy. No.
Yeah, that's
right?
what happened. That's what happened.
So I would want to understand first how much death benefit you got with this other policy.
75,000. Whole life.
And in 15 years, all you had was $1,800 to show for.
But they want me to use that money. They saying it's there to be used. It's not like I forgot what how the lady actually delivered the information. But I know it was $1,800. She told me, you can take this. I was like, I'll just leave where it's at. She was like, I could take a vacation, or I could do this, or I could do that.
If you want more bang for your buck and you want your money to grow, then I would ask more questions. I want to understand, because I need to understand, okay, because I don't know, sir. Are you married?
Do
you have children?
Yeah, got 4 of them.
Do you have grandchildren? How old are your
got
children?
5 grandkids.
5 grandkids. So I need to see the questions I'm asking. How old are they?
Yeah.
All of them under 10.
The grandkids.
Grandkids.
How old are your children?
All of them teenage. Well, I got one that's 30 and the other one is teenagers.
The rest are teenagers. So again, my mindset is going, oh, okay, so I need to understand, are you married?
Nah, yeah. Been married.
Okay. That's a lot of variables. If something happens to you,
take care of.
You have a heart attack, stroke, cancer, you die unexpectedly, whatever it is, what are we trying to solve? What are we trying to prevent? Looks like you live in a nice home.
I do.
How much is the mortgage on the home?
Too much.
Right? How much is the mortgage on the home? You just mentioned I'm married. So that makes it sound like you just recently got married. Is that accurate? No?
No, going on 8 years.
8 years. All right. So you've been married for 8 years. My question is going to be, are you trying to leave the missus anything? She got 4 kids that she's got to help raise.
Oh, yeah. I mean, of course, yeah.
Right. She got 4 kids she got to help raise. That if you pass away, and listen, I need to speak to the brothers real quick. I hope you don't mind, Brother Walker, but I need to speak to the brothers real quick because we got to do a better job of this. Because we'll say, I've heard it a lot of times. I'm not saying you all have said this, but I've heard it a lot of times. Oh, no, I ain't trying to leave her a whole lot. Then she brings some other man in there.
Oh,
that's crazy.
Yeah.
Let me share how crazy that is. Just real quick. This is the reason why we have these conversations, particularly in regard to the infinite banking, particularly in regard to building wealth. The reason why is because, watch this. If you got 4 kids, sir, if you don't leave her no money, you are guaranteeing that Mr. Bobo got to come in. Because you ain't left no replacement of your income.
Right.
She's been dependent on your income, but you didn't leave a replacement of it.
No, I don't like how you. I don't like Bobo.
Neither do I. But I had to make sure that if life happens,
yes,
my income is there. Because here's a legacy piece for all of y'all. Here's a legacy piece. If you leave enough of your income, you leave your family good if something were to happen to you, your kids are going to be your biggest cheerleader. Because if that other rascal try to come in the house, especially if you got a daughter, us men, if we got daughters, this is what the daughter going to do. She going to look at it. She going to say, we don't need you. You see this door handle? You see this door handle? My daddy bought this door. You see this TV up here? That's right. My daddy TV.
Right, right.
You see this chair right here? That's my daddy's chair.
Right, right.
Yeah.
Now, she might be able to get a pool boy that she can hang out with off site.
I don't like these scenarios. You keep doing that.
I know that's right.
You talking real talk. She gonna need a pool boy.
Yeah, I don't like that. I don't like that.
She might bring a pool boy and hang with him off site.
Right.
But she won't be able to bring him in your house.
Right. Right.
Because you left a legacy. Does that make sense, my brothers?
A lot of sense.
Yes, 100%.
It do. It do.
Okay. So now, with that being said, part of the planning is, let me say this to all of you all. This is me. Again, this even goes with the infinite banking. I would state this. I said this to brother. I said this to brother Walker. Everybody on here, in my opinion, unless you just got it going on, and I'm gonna explain why. Everybody in here should have a final expense plan as part of your plan. Here's the reason why. Final expense plans pay the fastest in the industry. Those plans, particularly with this company right here, Lincoln Heritage, right? They got it written, they pay in 24 hours. So I'll use me as an illustration. I've got a lot of life insurance on me. I've got 2 final expense plans on me as well. Totaling up to $70,000. I told my wife, I told my kids, if anything happens to me, do not spend no more than $10,000 on a funeral. Period. I don't care what they offer. Don't spend no more than 10. Take the other 60, go woosah somewhere. Go take a moment. Why? Because you are made, listen, brothers, y'all are a major part of your family. You die, for most of us, your kid's gonna go through something. Your spouse is gonna go through something. They don't need to have to worry about running back to work. They need a moment. Provide that moment. That's love. That's real love. Provide that moment. So I can guarantee with my wife, she's gonna get 70,000 if something happened to me. 10 is gonna be used by the funeral home. I don't care what they offering. That's pre-planning, that's final expense planning. The other 60 she can use for miscellaneous stuff and to go somewhere. While she's waiting on the be your own banker and the term policy you may have or whatever to come in. Because that money takes longer.
Nice.
Particularly, my mom structured her life insurance that we 4 kids would receive. Yes, absolutely. Whoever your mama is, you need to go kiss her grave. Not, or if she passed. Now, if she didn't, then I didn't mean it. Well, you need to go kiss her.
I spoke too soon. Right.
You need to go kiss her if she's still alive. But if you didn't, go kiss her grave. Because she looked out for you. That's exactly right. That's legacy. And key word he said, tax-free. That's why life insurance is so important. Because when it's properly structured, there's no taxes on that money. That's key. Unlike what some other entities will tell you, buy term, invest the rest. I want to hit that real quick. They'll tell you buy term, which means like a lot of times you're going to outlive the term. Term is cheap because most of the time they don't have to pay on it. Just understand that. Term is cheap because most of the time the insurance companies don't have to pay the term because most people
5, 10, 15 years worth of commission for somebody for selling.
Right. Have to pay on it. That's the reason why. They know most people, 90, I think the last I saw was like 98% of people outlive their term.
Wow.
Yes, sir.
Wow.
That's a question that I had. I have 2 questions because you talked about the term you used in the beginning. You said it was what corporate America, you said passive income plus dividends minus taxes equals wealth.
Right.
I was wanting you to compare that to what corporations are targeting when they leverage EBITDA, earnings before interest, taxes. What's the rest of it? Amortization is the last one. I think it's earnings before interest, taxes, depreciation, and amortization. That's the term that I hear in corporate America consistently, EBITDA.
Right.
EBITDA. Right.
Okay.
I think when you talk about people asking you, I'm just looking at the comparison there. Does it mean the same or is it something different? But the difference between term, whole, universal is based on where you are in life. Your age matters. Your health matters, right? In addition to your family dynamics and all of that. Typically, if you've waited to get insurance, if you didn't start like Kaneem, you said 15 years, whole life policy, that's a great idea because a whole life, you want your whole life. Term typically is designed for someone who waited late or didn't have whole life, but they want to make sure they have something in the event that something happens. And then universal life. I mean, in my whole life policy, the questions that I got answered was, am I going to be able to borrow money from this policy? Can I loan money to myself? Right?
Yes.
Can I use this policy for emergencies? What is the investment plan for the premiums that I pay?
Right.
do I make money off of that? Now, these are conversations and what I'm saying to you, Brother Brown, is it was a good insurance person who was asking family questions, life questions.
Mm-hmm.
What are you looking to be able to do? So you're
Yes.
absolutely right. You
Yes.
know, what do you want your kids to be able to do with this policy? Because when it's whole life, you're looking at yourself, but you're also looking at something that can pass down, which is why the insurance company matters. Right?
Correct.
It's not just taking care of the house if something happens to you. You know, I don't know if your spouse works, you know, or you have a stay-at-home mom or whatever the case might be. All of those factors come into play. So you're right. There's a lot of questions, and most of us miss the questions. Right. We just get sold. Right?
Absolutely.
Can you talk about who chooses a term policy? Why would a term policy be attractive compared to a whole life policy?
Well, I'm glad you asked that. So, again, with term, most people that use term are young. They're young. They're just starting out. The thought process around it is they don't have a whole lot of money. So you get a term. I do agree with that. I just don't think that should be the only thing. They get a term. They get a term to make sure that if I die prematurely, I can make sure I've left to be able to pay off the mortgage if I just got a mortgage, or at least for a certain amount of years, my income. That's primarily the thought. That's two reasons that I know of that people would buy or get a term: to mortgage protection, to pay off your mortgage, or to replace your income. Now, however, I would agree with you. So this is where many of our Caucasian brothers, Asian brothers and sisters, even Africans do. All right. Those are the ones I know about. Maybe others, but I know they do. They will get a whole life or UL, and they will put it on one of their children or grandchildren because they're younger. And you can't beat time. So when they put that money on them, do you know what a $50 or $100 policy premium would do on a young child in regard to legacy and growth?
A whole life, yeah, in a whole life scenario, absolutely. That you can make millionaires.
Yes, absolutely.
Yeah.
But again, mutual company. Let me put that out there. Again, mutual company. Like, I got a grandchild getting ready to come into the world in February. Be my first grandbaby. Putting $100 on a mutual policy on my grandbaby. I'm gonna make sure this grandbaby has this money, because that money continues to grow. Now, what I'm gonna probably utilize is a 20 pay to do it. Pay for 20 years. Leave it alone. That money grows phenomenally.
Right.
And you get to then do. Now, this is the thing, Brother Smooth, that your agent's telling you to do, but she's right in what she's telling you. I wouldn't agree in doing it for this purpose. This is what I mean. See, because she's a stock company, she wants you to feel good. She know that policy ain't worth 5 cents. She knows that you should be receiving more of a dividend on that. But she wants you to feel good. So go treat yourself somewhere. Right? Go.
And let me ask you on that though too.
Yes.
You're obviously not in favor of stock companies, but is there any advantage?
No.
Anything they get right per se that you would suggest?
Yeah, no. I am in favor of stock. That's the only place I'm not in favor of stock company is when you're dealing with the concept of building your own bank. It doesn't work.
Gotcha.
Okay.
This company right here is a stock company.
Okay.
Still offer it. But again, I'm offering it because the sole purpose of this one is if I die prematurely or whenever I die, because we all gonna die.
Right.
Put it out there. We just hoping it ain't no time soon.
Right.
This company's gonna pay my family in 24 hours.
Right.
So
Okay.
that's its primary purpose.
Okay.
The mutual company I'm doing to build a real legacy. Because here's what you can do with it. With the mutual company, as this money is being paid into it, my son, who's the one that's getting ready to get married, he's getting ready to have a baby. He's
Right.
been paying into his policy for about 10 years. Right? He's been paying his policy about 10 years. Right now, if I last saw, he's with a very good company. One of the companies that I was offering at the time is called Ohio National. Very good mutual company. Strong dividend. Not the only one, but they're good. They're very reputable. The cash flow he got in his policy, he's now getting ready to use as he's getting ready to come out of the military, and he's going to use it to buy property.
Nice.
That's passive income.
Nice.
Then he's going to rent. Watch this, y'all. This is what they do. So if you're a renter right now, please understand what your landlord is doing. You're paying their note.
Right.
So he gonna buy property. When he get ready to get started, he's buying property. He created his LLC. That's another thing I'm gonna get into in a minute. He created his LLC. He's gonna take it, buy the property, put a renter in it, and put the loan in the rent.
Right. Right.
And then just recycle it.
Yes.
That's all he's doing. That's all they've ever been doing with us.
Mm-hmm. Now we're doing it.
So that's what
It was good. First of all, let's make sure we understand that ain't a bad thing. You just have to outgrow it.
Right. Right.
And become that. What he's saying is good. Go buy some property, rent it out, get your passive income, and repeat
the process. Repeat the process. And then watch this. Because you're your own banker, you put that money back in to your policy.
Right.
But because the policy is already running, it's going to get caught back up in the cycle and duplicate itself.
Right.
And compound.
Right.
Then you do it again.
Right. Right.
Yeah. And then you put, so it's those kind of things. And watch this. When structured properly, this stuff is tax-free, y'all. When structured properly. Now, that's real important. So that's where, Brother Smooth, I would be, no, see, if she was telling you the truth, she should be saying, let's take this money and put it into something that's going to grow you some passive income.
Right, right.
That'll make you much happier than being on a cruise.
Right. Hold on, Kenny. Hold on. You said what?
See, man, you just move my mic whenever you get ready. I tell you, boy.
Because we get an echo. We get an echo. Go ahead.
Nobody hear no echo. Ain't nobody hear no echo but you. Like I said, that's why she was trying to tell me about the $1,800. So my question is, do I keep it or do I move it? Can I transfer it? I would dissolve it.
I would look at it again. I would want to know more. So off topic, like off. I can't say off cuff. I'd like to understand a little bit more about your dynamic. I'd like to understand a little bit more about your end game before I could give just saying this is what you should do. I think that is irresponsible. But just thinking about it, because
I figured you were gonna unmute me. But yeah, we'll have a conversation about it offline.
Offline. I would just want to understand more because I'm not.
Right.
See, in my mind, all of y'all seem like y'all are on this because y'all are good brothers, right? And you're seeking to do something more than what was done for you.
Right.
Right. So in my mind, I've got to hear you, understand where you are, and take into consideration. Bottom line, if anything happens to you, because here's something that's worse than death, y'all. Please get this. This is worse than death. You have a health crisis that makes you handicapped. You can't do what you used to do.
Right. Right.
Because that's an extra added expense on the household. Particularly if you were one of the primary breadwinners or the breadwinner. The whole house is impacted now, not just from an emotional standpoint, but from a financial standpoint. I'm 67, have 2 adult kids. Can I purchase a policy that provides cash dividends for them? Yes, you can. Absolutely. You would want to do that. I would tell you absolutely. You would want to do that. Let me give you this. I wish I could show it. I did one last year on a grandmother. Well, the grandmother she had done what she was supposed to. Okay. And her monthly bills were just her water bill, light bill, day-to-day bills, right? Mortgage paid off, car paid off. She living in the green. She living in the black, right? She decided, so she was like, well, how much could I do? So I just asked her, well, how much was your car payment? She said, oh, well, you know, or how much has she spent on the car is what I asked her. She says, I've done up to anywhere between $350 and $500. I said, no problem. Which one of those numbers would you be comfortable with? She said, I could do 500, no problem. Just like whoever that was that just said it. Right. Let me share this with you. She did this on her brand new great grandbaby. Right. $500 a month. Right. She paid this money for 30 years. We had it set up to pay for 30 years. Now, grandma may be gone by then at the end of the 30 years. Watch this, y'all. By the time that granddaughter turned her grandmother's age, she would have over $13 million of cash available to her in her policy at the age of 65. Wow. Tax free. Wow. If that ain't leaving a legacy, I don't know what is.
Now what you have to do is you have to do the math.
Yeah.
500 a month times 30 years. Mm-hmm. How much money? $108,000. Where does the growth come from? The growth comes from knowing that the money is being invested, mm-hmm. and you're leveraging total return funds. So you're not it's not aggressive investments. It's not emerging growth. It's not crypto.
Don't do that. Don't do that.
It's total. Don't do that. Hey,
you heard what he said.
Don't do that.
It's total. Hey, listen, man. The same way Kaneem believed Donald Trump going to jail, I don't believe in crypto.
Right. You ain't have to bring my
that was unnecessary. Yeah.
I mean, let me stand on Donald Trump. You just keep on talking about compound interest.
The reality is, you have a higher guarantee of return when you have total returns of mutual. That's why Brother Brown keeps talking about mutual, right? Because it's long-term investments, but they're more sure, they're more guaranteed,
right?
Short-term or emerging growth, and that's the benefit of a whole life policy at an early age, that you just pay into it for years, and then all of a sudden it begins to take care of itself.
Correct.
Right.
Okay.
That's the best case scenario.
Okay.
Yes. And again, you want to. So again, understanding the track record, right, of particular companies is important. So understanding that track record is important. How have they performed
Right.
over the years when certain things happen? Like I'm going to look at, okay, in 2008, when the housing market crisis hit, how did this company perform?
Right.
2015, when there was another major market correction, how did this company perform?
Right.
I'm going to look for that. Because if they can perform in the difficult times, you know what they're going to do in gravy time.
Right.
Right? So it kind of gives you a track record just so you'll understand. But having a mutual company is really important. I do agree 100%.
Okay.
I'm doing it myself. As soon as my grandbaby is old enough, 15 days old.
Nice.
So my grandbaby's 15 days old. Granddaddy putting a policy. Me and my wife, we putting a policy on that baby. We're gonna pay it. Because
Hey, gentlemen, I got to
to
get out of here, man. I appreciate all these nuggets of information. Y'all boys have a good day.
Appreciate you, man.
Bless you, man.
Thank
Take it
you.
easy, man.
All right now.
So with that being said, I don't want to hold folks too long. One more thing.
I have a part 2.
Okay, just part 2. So you want to use that, but I want to share something with each of you in regard to preserving your legacy.
Okay.
So with life insurance is looked at as real property, but it's the real property that people utilize that have automatically you have to put a beneficiary on it.
Right. Okay.
So what happens is if somebody passes away, that the ownership what happens is the ownership of the policy now transfers to the beneficiary. The beneficiary gets the proceeds from it and it's tax-free. That's what has happened. All right. However, I want to give y'all a concept. Please write this down in regard to what you're building. And the concept is own nothing but control everything.
All right. Listen. Wait. I knew he was gonna go there.
Okay.
I want y'all to let that marinate. I'm gonna have you back on because we can't just glaze over it.
Okay, I'm sorry, I didn't realize that. Okay.
No, you're fine. You're fine. Because we're gonna be here another hour on that one.
Okay.
We're gonna be here another hour on that.
Okay.
Because you started tipping and I was like, you're gonna start talking about the trust. No, we're gonna because I want to take it slow, step by step a little. If you got the time.
Yes, sir.
If next week the same time would be great if possible. All right. So you guys make sure you tune in next week. So we talked about life insurance. We talked about how to start structuring or the questions you should ask, and make sure they're asking you questions that are relevant to you, not just based on what they want to sell.
Right.
So let me ask this. Yeah, he said, "Good. Can we have a part 2?" Yes, definitely. I think he's committed to next week.
Yeah.
If you can sum up, like, what are some of the questions I should ask an insurance agent? Like, what are some of, like, maybe 5 questions, things I should ask an insurance agent? Because a lot of times, like you said, like what Kaneem went into, and a lot of us, like even I've gone into kind of blindly, just like we're open. Whatever it is you got, I guess I'm gonna have to buy. Because that's the mindset. I guess this is all we have because this is what you got.
I don't know if there's any questions per se that I would ask. I think there's questions that you need to be answered.
Okay.
About yourself.
Okay.
So again, what is your end game?
What is the end game? Okay.
Who is impacted if something were to happen to me? Both if I pass away prematurely or if I had a health crisis that left me limited in my mobility or the ability to take care of myself.
Right.
Right. You want to ask those questions, right? Who, in regard to your children, how much? I think I don't remember the brother with the looks like the Miami Heat hat on. What's his name? What's your name?
You talking about Jeff?
Jeff.
No,
Okay.
E. Or Jeff?
Yeah, it's E.
Oh, E got a Miami Heat hat on.
Yeah.
Oh, E. I'm sorry.
E. Okay. So E, he said that, I think it was you that said, your grandmother left you $216,000 or each one or whatever, or something like that.
Yeah.
Oh, that was John. Yeah, I'm with you, but yeah.
Oh, that was John. Okay, I'm sorry. I
No,
didn't realize who it was, but okay. So, right. So the question is how much do you want to leave your family?
Right.
Because the reality is this, y'all, we're going to die. Right. It's going to happen, period.
Sure.
We just hope it ain't no time soon, but it's going to happen. How much do I want to leave? Right? You want to be able to know that. I gave you the math behind what how you can figure out your number. I'll give it to you real quick. Again, look at your age, how much you're earning. I call it the 9/11 rule. Your age, how much you're earning, and then when do you anticipate, if you're working a regular 9 to 5 or something like that, when do you anticipate you're going to retire? Now, I can't get into the other part, but that it's important. So I hope y'all come next week in regard to how you pass this stuff on right.
Okay. Yes,
that's going to be really important, because let me share that with you. Not doing this is the reason why the African American community has suffered in regard to losing their wealth.
All right. Awesome.
We've done the work. Yeah. We just haven't been structured right. So therefore, other entities come in and they take what we've built up.
Awesome. That's good. Let that marinate, guys. Let that marinate. So make sure you share, tag somebody, let everybody know that we will be on, of course, tomorrow. But next week we'll have Mr. Jamal Brown back in the building, discussing legacy, trust, and where to put your name and ownership when it comes to the things that you possess and own with property, from insurance. All right. So again, we appreciate.
Is it possible that I can if anybody got any further questions on the side, that I can leave my name and number, if that's possible?
Yes, you can.
My name is Jamal Brown. I am the CEO of Trinity Insurance Group. We're part of the UBI family and KIG. My number is 919-337-8304. 919-337-8304. I got pretty much every license you can think of. I'm in multiple states, so I'm pretty familiar. Be glad to share any information I can, because I really want our community to become educated about this stuff and to put stuff into play. Our families are worth it.
So 919-337-8304, Jamal Brown. All right. Yes. So contact him. He'll get into the details and the questions that you need to ask. Some of the stuff you probably couldn't share here. And so dig into that. So this gentleman, just as a shout out to brother Mike McLemore for connecting me with this gentleman. Truly a blessing. I appreciate him for being here and giving us his time. And prayerfully we can be a blessing to him. So if you have any questions, looking to get insurance, that's the man to call. And I think he has as well as classes.
So I am. It took a break now, but next year be a platform called Be Free University. The founder of it is George Howard and Dr. Rashida Jackson. They're the founders of it, but it's a phenomenal platform in regard to just building wealth, and it deals with everything, including, I don't know, the brother whoever said in terms of crypto, they do deal with that as well. It is there. they do deal with that. But they do in terms of legacy building, life insurance, buying and selling a property, all of those kind of things. They deal with everything. Getting your business structured, difference between LLC, S Corp, C Corp, making sure you understand that, all so on and so forth. Yeah.
Okay. Awesome. All right. So appreciate you guys for being here. Thank you for rocking for us. Another edition of the Brothers of Legacy. Thank you, Jamal Brown, for being here and sharing. Kaneem, thank you for being here. Pastor McCory, always. And Ephraim, Mr. Reparations Terrell in the building. Appreciate you being here as well.
I can work reparations into our insurance policy.
I'm working on it.
So we look forward to seeing you guys tomorrow. Same time, same channel. No, it's Mental Health Wednesday with our very own therapist, Mr. Matt Genius. Hey, make sure you go to Apple Music. He has a new single out as well. Matt Genius with 1 T. Matt Genius. All right, so make sure you check it out. All right, so we look forward to seeing you guys. Same time, same channel. Know that we love you. Jesus loves you more. Hey, Jamal, don't leave. Just give us a few minutes to when we close out. All right. So thank you guys for being here. We look forward to seeing you guys tomorrow. Peace out.